Good morning everyone and welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now it's quite early in the session. The European markets are due to open in about 10 minutes time. Currently futures are pointing slightly open. US futures trading relatively flat. We've had mixed trade in Asia overnight. Today's video is more going to be a look at the session ahead. We do have a number of key events which I think people should take note of, but it's also been quite active in the overnight session for Europe as well. We had the release of the FOMC minutes last night, which was of course key, and I think the biggest thing we learned from this was there is a clear divide amongst the FOMC members. There's those that think we should be looking to raise rates in the next few months, and then there's those that are still remain data dependent. They're still clearly a bit skeptical about whether the timing is right to continue in tightening monetary policy. What we learned from this is relatively little compared to what we already knew. I think it was already quite unlikely that we were going to see a rate hike in September, despite what William Dudley alluded to earlier in the week. I think if we are going to see a rate hike this year, it is looking likely that it's going to be December, especially if the economic conditions continue to improve. But other than that, I think we learned very little from the minutes themselves. We also heard from a advisor to Shinzo Abe overnight, a close ally, who spoke about the potential for the Bank of Japan to ease monetary policy considerably at the next meeting on the 20th of September. He talked about the comprehensive assessment that the Bank of Japan has been conducting since the last meeting, and said that he doesn't expect it to tell them anything apart from the fact that they need to ease monetary policy considerably further in order to try and hit the inflation target. He actually said that he thinks there's at least a 50% chance of some bold monetary policy stimulus measures at that next meeting. Now, the response in the yen has been very mild, I guess. It's one of these cases where the boy who cried wolf. I guess we've had policy officials or other officials from Japan on numerous occasions over the course of the last year talking about the strength of the yen, talking about the need for the yen to be weakened, talking about the need for further stimulus, and that hasn't then been forthcoming. So I think these comments from one of Shinzo Abe's closest allies has been brushed off at this moment in time. At the moment, the yen is actually trading ever so slightly higher, just trading through the 100 level against the US dollar. So largely these comments have been brushed off, but maybe we should remain vigilant ahead of this meeting in September. He did seem quite confident that further bold easing measures are going to follow. In terms of the key events today, if we take a look at the economic calendar, you can see that it is quite a packed day. We have had some data from Australia overnight, some strong employment data, the unemployment rate falling to 5.7%, and a strong showing on the employment change as well. I don't really think this changes the outlook in terms of the RBA. This is one good employment report, but it doesn't change the fact that the Australian dollar remains strengthened. It doesn't change the fact that we are still in a moderate growth environment. The employment situation is getting better, but clearly still not fantastic. And as long as the housing market continues to show signs of not overheating, I do think the RBA are going to be inclined to take further stimulus measures in terms of interest rate cuts over in the coming months. So a strong employment report, but not necessarily a game changer, I don't think. In terms of the key events today, the one that stands out is the UK retail sales report. This is the first retail sales report since the Brexit vote occurred, so it's for July. I don't expect anything negative from this, if I'm perfectly honest. We're expecting 0.2% month-on-month, 0.4% core month-on-month for July. The BRC data and other retail sales data for the UK suggests that in the month of July, retail sales were actually continue to be quite strong. And I think the real reason for this is the consumer is generally not affected by events such as this immediately. In order for the consumer to be affected, I think their incomes need to be impacted, and I think things like the labour markets need to be impacted before they start to spend less in the shops. At least what you need to see is maybe a recession, and then people start to maybe tighten the purse strings. But as of yet, it's still very early doors, and I don't think the consumer's going to be feeling the impact of the vote, any impact that we are potentially going to see further down the road. And that's why I do think we are going to see a decent retail sales report. Like I say, month-on-month figures are looking all right in terms of what the consensus forecast is, and year-on-year as well, 4.2% growth expected year-on-year, down slightly from 4.3, and 3.9% growth year-on-year in terms of core retail sales. Again, they are very strong figures, and I just don't think we're going to see the impact of the Brexit vote quite yet. We're going to get the final core and CPI readings from the euro area. They're expected to be unchanged. The ECB monetary policy meeting accounts could be key, except for the fact that the last meeting was relatively a non-event. If you remember back at the meeting last month, the ECB claimed that it was too early to gauge what the impact of the Brexit vote could be. They needed to see more economic data before deciding on any further stimulus measures. They also have the next set of economic forecasts will be published at the next meeting as well, which means that any decision was unlikely to be taken at the last meeting and is more likely to come at the next meeting if they deem it necessary. The minutes themselves should therefore be a bit of a non-event. I don't expect there to be any different in the rhetoric in the minutes than we had in the last in the meeting itself and in the statement and the press conference that followed. But it'll be interesting to see what they do have to say. I just don't expect too much to come from the actual accounts themselves. We've also got plenty of economic data to come from the US, jobless claims, Philly Fed manufacturing index, CB leading indicator, and of course FOMC member Williams' speech. That's John Williams, who the other day raised questions about whether the Fed's inflation target is suitable for the current economic environment, raising questions about whether the inflation target should be raised so that the Fed can continue to provide stimulative monetary policy at a time when growth is quite sluggish in the US, and global growth is, of course, remains extremely sluggish indeed, and is actually slowing at the moment. So some key important events to come for you throughout the trading session today. Aside from that, do check out the MarketPulse website. Plenty of articles for you to see there to keep up to date with the markets. Many different markets there as well. This is where myself and other analysts post a number of different articles throughout the day, covering a range of topics, including both fundamental and technical analysis. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.